Hello, and a very warm welcome to you. Today, we're diving into something huge, a real seismic shift happening in the UK's financial world. We're calling it the Great Pension Reset. Now, this entire breakdown has been put together by the experts over at ProTax Accountant, and it's all about helping you get to grips with the critical tax changes that are just around the corner for your retirement savings. All right, let's not waste any time. I want to ask you something directly, and it's a big one. Is your retirement plan really ready for the shocks that are coming in 2026? Because honestly, what's ahead could completely change the game for your financial future. It really feels like the ground is shifting under our feet, doesn't it? All those rules for pensions and tax, the ones we've relied on for years, well, they're being totally rewritten. And that means a plan that you thought was rock solid, even just last year, might suddenly be at risk. Okay, so to help us make sense of all this, here's what we're going to cover. We'll kick off with the Great Pension Reset itself, then get into the inheritance tax shock, a real squeeze on savings, and then the good stuff, how to navigate this new landscape. We'll wrap up with the key numbers and dates you need to know, and most importantly, your next steps. Right, first up, the Great Pension Reset. So what actually kicked all of this off? Well, it all goes back to the autumn 2025 budget. And believe me, this wasn't just a little tweak here and there. Nope, this was the starting gun for a massive overhaul of the rules that govern our retirement savings. And let's just talk about the sheer scale of this for a second. We're looking at major tax rises that are going to bring in a staggering £26.6 billion by the 2030/31 tax year. I mean, that is a huge number. It's clear this isn't just tinkering. It means the entire landscape for us savers has fundamentally changed. Okay, let's move on to the next big topic. And honestly, this is the one that's got so many people worried. We're talking about the inheritance tax shock. For a lot of families, this is probably the biggest, most significant change to planning your legacy that we've seen in a generation. So here's the deal, laid out plain and simple. For years, the amazing thing about your pension was that it was basically invisible to the tax man for inheritance purposes. Before April 27, anything left in your pot could be passed on to your family completely free of inheritance tax. But look at the change. After April 27, that money gets lumped in with the rest of your estate when you die. That's not just a small change. It's a total game changer. And this is the number that really matters. 40%. That money you've worked so hard for, that was once completely sheltered, could now get hit with a 40% tax bill. Just think about that. A huge chunk of the pension you've spent a lifetime building could just vanish in tax. To really see what this means, let's take an example. Let's think about David. He's a small business owner in London. He's worked his socks off and he's built up a pension pot of £500,000. Now before, that whole amount could have gone to his kids tax-free. But now, his family could be facing a tax bill of £200,000 on that pension. It's just staggering. But that's not all, not by a long shot. Next up, we've got what feels like a two-pronged attack on your savings. It's like you're being squeezed from both ends. It's not just about the money you leave behind. It's also about how much harder it's becoming to save in the first place. So the first part of this attack is something called fiscal drag. It's a bit of a sneaky one, really. What happens is the government freezes the tax thresholds. So even if you get a small pay rise just to keep up with inflation, you're not actually better off. In fact, you could be worse off because that little bit of extra cash pushes you into a higher tax band. And the impact of this is huge. Because these personal tax thresholds are now frozen solid until April 2031, it's projected that an extra 1.7 million people will get dragged into paying higher rate tax. And we're not just talking about high flyers here. This includes nurses, teachers, police officers, people who never ever thought they'd be in a higher tax bracket. So for a while now, one of the cleverest ways to fight back against this has been using salary sacrifice schemes. Here's a quick pro tip on how it works. You basically agree to take a slightly lower salary, and your boss puts the difference straight into your pension before you're taxed. It's a great way to lower your national insurance bill. But, and you knew there was a but coming, right? Here's the second prong of that attack. Starting in 2029, the government is slapping a cap on that national insurance relief. It'll only apply to the first £2,000 you contribute. So a really powerful savings tool is about to get a lot less powerful. But stay with me here, because in the next bit, we're going to talk about how you can start to take back control. Okay, that was a lot of doom and gloom, I know. But now we're going to shift gears. Let's move from being concerned to being in control. The key to this new landscape isn't to panic, it's to be proactive. It's about understanding these new rules and figuring out how to make them work for you, not against you. And here's a really clear 4-step process to do just that. Number 1, review your current plan. Does it still make sense? Number 2, recalculate your future needs. How much will you actually need? Number 3, re-strategize how you save and how you gift money. And finally, number 4, reevaluate your will and your beneficiaries. This is absolutely crucial now. And here's a quick did you know for you, because it's not just about pensions. The squeeze is happening everywhere. From April 2026, dividend tax is going up by 2%. A year later, savings income tax goes up by 2% as well. It's a wider attack on all forms of saving and investing, which is why that big picture review is so important. Okay, here's another pro tip for you, and this is something you can act on right now. We all get a £3,000 gift exemption for inheritance tax each year, but here's the clever part. If you didn't use last year's allowance, you can carry it forward. That means you could give away £6,000 this year, totally IHT-free. It's a great little move to make. All right, we've covered a lot of ground, I know, so let's pull all the most important bits together. Think of this as your financial cheat sheet for the next few years. These are the key numbers and dates you absolutely need to remember. So let's quickly run through them. First, the big one, pensions get included in inheritance tax at that 40% rate from April 2027. The dividend tax rise, that's plus 2%, starting April 2026. The cap on salary sacrifice relief is £2,000, and that begins in 2029. And finally, that personal tax freeze, that's holding firm at £12,570 all the way until April 2031. And here it is, all laid out on a timeline. The whole thing kicked off with the budget announcement back in November 2025. Then, April 2026, that's when the new tax year begins and the dividend tax goes up. April 2027, circle that one in red, that's when IHT on pensions starts. The salary sacrifice cap comes in 2029. And then we have to wait all the way until April 2031 for that threshold freeze to finally end. Which brings us to, without a doubt, the most important part of this whole discussion, your next steps. What do you do now? How do you take all of this and actually use it to protect your financial future? Okay, now before we get into the final steps, I have to say this, and it's really important. Everything we've talked about today is for general guidance. It's not a substitute for professional advice, and you really shouldn't rely on it alone to make big financial decisions. Everyone's situation is different, which is why you must speak to a professional tax expert. And you know, this quote from the team at Pro Tax Accountant just hits the nail on the head. It says, "Navigating this reset alone is risky. A personalized plan is no longer a luxury, it's a necessity." And that's exactly right. Trying to do this on your own, it's just too risky now. A proper, tailored plan isn't a nice-to-have anymore. It's essential. And that's where the team at Pro Tax Accountant can really help. They can sit down with you and build that personalized plan to tackle the new IHT rules, make sure you're using every tax allowance you can, secure your income for retirement, and, crucially, make sure your wealth goes to your loved ones in the most efficient way possible. All their contact details are right there for you. You can give them a call or send a WhatsApp to 07985689912 or just drop them an email at info@protaxaccountant.co.uk. So I'll leave you with one final question to think about. After everything we've gone through today, is your family's future wealth truly protected? It's a tough question, but right now it's one that really needs an answer. Thank you so much for watching this crucial update. Look, the financial world is always changing, so for more essential insights just like this, make sure you subscribe to the Pro Tax Accountant channel. Stay safe and stay informed.